I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. We've just wrapped up our Eurogeddon meeting where we've taken a look at what-if scenarios for the global economy. I'm here with Adrian Foster of Rabobank and Vincent Duhamel with Lombard Odier. I'm talking to both of you about what we just talked about, which was the possibility, the likelihood, the impact of a euro collapse. Neither of you had thought that this was a likely scenario, but you had different takes on what would be the outcome in the next year or the next 18 months. Vincent, you specifically saw a scenario where
I was asked.
Yeah, you were asked. Yeah, you were put on the spot, and I'll put you on the spot again. You said the Greeks out in 18 months.
Well, basically, the assumption is that in July the ECB came in and decided that, drew a line in the sand and basically said, that's it, we're going to print as much we need to print in order to allow the European economies to get themselves into a position where they can take a little bit more hits or to reform themselves.
Yeah.
Part of the reform is the reform of the institutions, reform wage adjustments that you need to have throughout Europe, and there's also that part of it is to basically repair a mistake that was done a few years back, which was to admit Greece into the euro. Greece is not, should not have been in. It was allowed in, it was tolerated in while things were going well, and I think there is going to be a point where the realization of that mistake, in addition to the fact that Greece is just not capable, either because of the level of debt, because of the social pressures that it creates, to continue to readjust in a way for itself to be competitive.
Right.
And the best way out would be to manage an exit of Greece, which will only happen once things have stabilized in Europe.
Okay, so once we've calmed down, then we're going to redress the mistakes of the past. Now, Adrian, you on the other hand didn't necessarily think that a Greek exit was possible, but you saw a potential political angle to that.
Well, I think it's worth remembering, we look from afar at the European Union, and we're widely discussing the economic challenges at the moment. But of course, we also in the next breath say, but of course the Eurozone was never an economic goal in its own right, it was more broadly a political union.
Absolutely.
And I think that's still a feature which is very much the backdrop to Eurozone, if you like, and I think we should keep that in mind. So, will Greece bear economic difficulties from staying in the Eurozone? Absolutely. Will Greece be better off economically, politically, and geopolitically outside the Eurozone? I really have reservations about that. I doubt it to be true. I think when you take the sort of the dashboard of considerations that the Greek politicians will have on their table, so to speak, I think their best situation is actually to stay in the Eurozone.
Okay, and regardless of your take, both of you, if I recall, assign a very low probability to the potential of the euro breaking up as an institution. Would that be right?
Yeah. No, I think the cost of breaking up the euro is just too large to do. Just in terms of logistically, in terms of the economies, the impact it would have on the rest of the world, it is just not something that is to be considered at this point in time.
Okay, and with regards to the second what-if scenario, China's hard landing, Adrian, as well, you didn't see that being a very likely possibility.
Well, I think there's a tendency to want some catchy lines to describe what's going on. So, of course, a hard landing is one of those catchy lines that are out there.
Yeah.
And if you look at China's economy, there's no doubt it slowed late last year through the first half of this year. And some people's reckoning it's already experienced a hard landing. I look at the policymakers and not so much at what they're saying as what they're doing. And if you look to the fiscal accounts, for example, they're already moved massively into deficit. So, classic counter-cyclical fiscal pump priming. We've seen it many, many times around the world, and we're seeing it in China now. And I just think it's a mistake to wait for the big announcement on this fiscal boost to the economy. And indeed, looking behind the numbers, it's already clearly in play.
You were saying that you actually saw a government deficit on the budget in the budget outlook that was more or less equal to, or in fact larger than
2009. I think we're very comfortable with the idea that there was fiscal and monetary stimulus pumped en masse into China's economy in 2009 against the backdrop of the GFC.
Yes.
We're not seeing anything near that in terms of the monetary position at this time around.
Right.
But when you look at the fiscal accounts, they're actually in a much larger deficit now than they were in 2009.
Right.
And it's not because revenues have dried up. Revenue growth has slowed, fiscal revenue growth has slowed,
right.
but it's still positive, around about the 9% year on year, I think.
Yeah.
It's that spending growth has accelerated, and it's currently running at about 16%.
So we're having a stealth stimulus.
A stealth stimulus. Yeah.
And the other thing that's sort of stealthy, and we talked a little bit about this, Vincent, is the transition, the power transition going on right now in Beijing also seems to be almost uncomfortably opaque. I mean, we're used to a certain lack of transparency, but this is taking far too long, and there's far too little information coming out. And what impact do you think that that's going to have on markets or decision makers when they think about China in 2013?
Well, to some extent, in the last year, the policymakers in China have kind of tried to stabilize things and slow them down, just
right.
as they prepare themselves to go through this transition.
Yeah.
Those transitions takes a little bit of time. It's opaque, but it's not surprising. You know, it's
right,
everything
right.
in Beijing is always opaque, and it's just a continuing process, political process within the party to try to figure out, you know, the power plays that you have between different factions of the party. The impact that it has on the markets, it has slowed down the markets. It's been quite dramatic for Chinese equities, but you know, basically the economy keeps on humming. Things continue to be done. And I think what you'll see is that in the next 3 years, the policymakers are probably not going to be making that many changes as they're trying to put in place their political base, their power base, and then it's after that they're going to start putting the reforms that are probably necessary as you try to accommodate a much bigger economy, much broader economy for the next wave, for the future.
Got it. Well, so both of you have a view that that we've perhaps turned, if not turned a corner on these potential risks, that they neither one signal a massive veering from a generally positive growth outlook in 2013. Low yield, you were quick to remind us of this, but not anything that's going to be terribly disruptive. Is that fair to say?
I think that's
yeah.
right.
Okay, great. Gentlemen, thank you very much. Adrian, Vincent, thank you for your time. I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. Thanks for watching.